carry forward a conversation with Karan Taurani as well as KS Narayan on the QSR space. What is happening in the industry? Are we seeing a slowdown? Are there concerns about raw material price inflation still on these companies? Thank you so much, gentlemen, for joining in with us this afternoon. This is Vani Motiwala this side, and what I want to start by talking about is the slowdown that we are seeing, and we've seen coming in earnings of the companies as well. They've highlighted that there is a slowdown that they've seen coming in post the festive season. Now, when you talk about Q4, whether January, February, and almost half of March, are we seeing a recovery coming in terms of demand? How is that shaping up now? Mr. Narayan, I'll take that to you first.
Yeah, I think thanks a lot. Now, if you take a step back, yes, October was really a very good month on the back of festive demand and also the holiday season, etc. So, but on the back of it, typically December is the biggest month for the food service industry, end December, beginning January. So, based on that, I guess the plans were there to see a bumper December going in. Unfortunately, that didn't happen. The slowdown started creeping in starting middle of November or so. And so was not very good, and which was there in the earnings reported by the various players. Getting into Jan, February, March, the trend seems to continue the way it was in December. We are seeing distinct drop down in terms of demand, which is there. And that's what we are really witnessing at this point in time. So though the initial indications are March is a shade better than January, February, but still nothing very significant to talk about.
Karan, what is the sense that you are getting when you talk to companies, when you talk to investors? What are they trying to price in with the sort of derating we've seen for a lot of QSR players?
See, very clearly in terms of demand, we are seeing a significant drop as far as consumption is concerned, and people seem to be sort of downtrading. So, which is why if you can also see in terms of the offerings which is there, till about a couple of years back, till about almost till the middle of the last year, they were talking of premiumization, and we saw gourmet pizzas coming in, gourmet cheeseburgers, etc., going in. But now, if you clearly see, I think all of them are going after the value customers. We're seeing a lot more value offerings coming in, a lot more bundling of options, suggesting sort of meal options that are going in. So all of that clearly indicating that the tide seems to be turning, and hence brands are going after such customers and building a further, ensuring that they sort of come through this period unscathed.
Karan, what do you make of the same question?
Yeah, so I think the environment seems to be tough. We were trying to do a math in terms of what has been the decline from the OND festive heavy quarter towards the Jan-Feb-March quarter. The general decline has been about 5 to 6% on an average in the pre-COVID era. But given this kind of a troubled environment right now, we foresee the decline could be much more sharper, even in the range of towards 8 to 10%. Two, three reasons for that. One is, of course, most of these companies have expanded very aggressively. So I think if you look at the other chains, like, apart from Jubilant and Westlife, the ones which have got recently listed a year and a half back, all of them have expanded anywhere close to 15 to 25% in terms of store addition. And that's a healthy expansion. So what's happened here is that you have a situation wherein demand is kind of, tapering off, and, the store expansion is healthy. And the consumption, of course, has not gone up in that way particularly. So I think that is kind of, playing down, against them. And we've clearly seen, how the growth rates also have converged. So I think on an SSG basis, there's been a convergence of growth rate across the board. But I think pizza as a category here has struggled more as compared to others, because if you look at others category, like if you look at fried chicken or burgers, lastly, in terms of KFC or even Best Buy for that matter, I think they are still outperforming the market by a margin. One of the bigger reasons there is in delivery, right? So if you look at the delivery numbers of all these chains, in the pre-COVID era, it was only about 10 to 15%. Today, it's about 35 to 36%. And there's still potential to grow from here on slightly. So I think the only outperformance which is happening on the other food categories, which have kind of opened up in terms of delivery, which was not the case in the pre-COVID era, because delivery was dominated more by the pizza category. And I think in terms of valuations as well, I think all of these stocks have come off by anywhere close to 20 to 25% over the last 3 to 4 months. And virtually, do factor in, this entire slowdown which is happening in terms of demand environment. But we believe that Westlife still there is still some potential downside from here on, and that's the only pick which will probably go down. But if you look at Devyani, if you look at Jubilant, Sapphire, I think they're all trading at very reasonable valuations. But the up move will also depend in terms of how things pan out, because what you're going to see this year is also RM inflation, specifically dairy prices going up. So these are some concerns, which are still there and still persist for these companies. And I mean, there has to be some kind of drivers for the valuations to move up from here.
Right, Karan. Just want to talk about the drivers then specifically, and in terms of what should we be expecting in terms of any number you would like to say in terms of growth for these companies in Q4. Would this actually be a decline? And specifically, if you're mentioning if pizza is not doing as well as burgers, does that mean Jubilant Foodworks numbers or growth would be a bit slower than Westlife then?
Yeah, there's a high probability. In fact, Jubilant Foodwork could definitely underperform versus Westlife, because I think Westlife has got one more quarter wherein the base has to normalize for delivery segment. So what we've seen in FY23 was, one of the first financial years wherein things moved to normalcy. And they've been outperforming, Jubilant by a very big margin. I mean, Westlife probably is doing at, 15, 16, 17% SSG. And Jubilant growth rates on SSG front has been, about high single digit, about 6 to 8% kind of a range, which is further converged in the O&D quarter. So, Q4 is going to be one more quarter when the outperformance will happen from Westlife versus the Jubilant. But going ahead, we see a convergence even in the Westlife numbers. We believe that, this 14-15% SSG growth rate is not convergent, not sustainable. Because two, three reasons. I think the reason why the growth rates have come to that number is because one is, of course, delivery numbers have moved up significantly. As a contribution, they were at 15%, they moved to 35%. That I think will probably peak out at 40%. Second reason has been the McCafe. So I think the McCafe offering in terms of penetration, I think they're already at close to 85 to 90% having the McCafe offering. And third, of course, there has been some fillip, of the fried chicken launch, which has happened in South. So I think there are not enough drivers for this 14-15% SSG for us to sustain for a Westlife. I think that will move towards 7 to 8% range in F24 and beyond. And as far as Jubilant is concerned, I think still some competition and still some time away before they get back to that 7 to 9% kind of SSG growth rate on a sustained basis, because I think the competitive intensity in pizza has gone up, plus the competitive intensity on delivery front, because of aggregators now being available for all types of food products and the customers actually wanting to try different kind of food products and not just pizza. I think pressure is going to be there for Jubilant for the next 2 quarters also in terms of growth. But albeit that, I think the valuations have bottomed out. We don't foresee like a big downside on the stock.
Narayan, could you also give us some perspective on down trading, if any? Prices across the board have gone up. People have moved towards premiumization. But what's happening in terms of pricing? How does it work when you have such hyperinflation?
See, I think the industry has seen such phenomena earlier as well, with hyperinflation as well as in sort of demand sort of petering down. So very clearly, all the brands then clearly go back to basics in terms of focus on basic operations, ensure that the value meals get delivered well on time, a good one. So all of that, all the innovation that really happens is in the whole value category. And they're also doing a lot of bundling, which happens as far as meals, etc. is concerned. So clear focus goes back on that, so that they ensure that they are able to capture the customer at the lower end and sort of keep the store count sort of in terms of the consumers walking into the store, that count keep accelerating. So that is the critical thing. It has happened in the past. I think they'll still, all of them will get back into this. We'll see a lot many more value offerings coming in, re-engineering of products, ensuring value for money delivery, and that's something which is there. The other important point to note is very clearly looking at going forward is the demand scenario over the next 6 months, and also the inflation. Amongst the various products, I think products like wheat, oil, etc., spices, etc., really come off their highs. So it's going to be moderate or normal. The biggest cause for concern is milk, and cheese is a big component for both the pizzas as well as burgers, and that is where we could see a lot of action in terms of what is the sort of innovation that can really go in over there. We've seen about almost 20-25% increase in milk prices last year over this year. Some part of it has been passed on to the brands as part of inflation. Some still yet to be passed on. And now further with these challenges on milk availability, that becomes crucial as we enter the lean summer months. And we've seen that even the month of November, December, brands like Mother Dairy, Amul, etc., have increased prices. And that really has never been the case in winter milk prices going up. So cheese is going to be a big area of concern for all these brands.
Right. Thank you so much, Narayan, as well as Karan, for joining in with us this afternoon, giving us an understanding on what is happening in the QSR space as well. Thank you so much, gentlemen, for joining in with us.